Welcome to TradeTheMBI.com. This is John. This reports for the 15th. The Ides of March have arrived, and the data just keeps getting uglier with inflation, oil, everything that you can imagine. And so it's going to create some interesting prospects for the market because you've got inflation that's still running hot. The impact that it's having seems to be varied depending on the circumstances, but from a reading standpoint, you're still not getting any real activity from a short standpoint. It's mostly just how much more energy do bulls want to put into things before taking some gains. All we're moving between is the ABM yellow here back and forth. We're not even really making attempts, at least from the S&P to the 76% Fibonacci line. At least the NASDAQ is moving a little bit further from that category. We're getting pushes down to it, and it's just a bit of back and forth. So this is a pretty weak move, so to speak, given the fact we've had rising gold. That doesn't bode well going forward because it just means that the likelihood of filling these positive extremes that still exist from back here increases significantly. So it's something to weigh. The bond market has recognized the foolishness, and we laughed, and I take it for granted because I get tongue in cheek sometimes when I kind of mock some of the moves that are taking place because you can just see how it's going to fail. And that's okay. That's the best part of what our indicators give us, this disconnect from reality and then the reverberation as it has to move back towards a corrective state. And the bond market has recognized there isn't going to be any change in reduction rate with inflation rate running like it is. And as long as oil continues to move, it's a nightmare. And here's oil breaking into new highs. Just as I warned, I mean, it was pretty obvious where this was going to happen because, again, you get the secondary effect. As you devalue, the commodities are not going to accept it, and they're going to continue to rise proportional to the devaluation that takes place. And so this is where that spiral I talked about. So even if you had significant production increases and or even excesses, you probably still aren't going to get a whole lot of price movement because again it's taking into account the devaluation of fiat currencies. The biggest faux situation here was the euro because again, as I said, as oil moves, the euro has to go down because they have to trade euros for dollars. And despite the fact that their interest rates are below what you can get competitively now in the US, and that it's a capital draw. There's just no other way around it. So that they've been able to hold it as well as they have, that's fantastic. I mean, as much as people talk about the death of the dollar, relative to what? What are you going to compare it to? Well, there's only one thing you're going to compare it to: cryptos and or gold. And you can see the effect of those versus what you're seeing from fiat currency. So that just becomes the obvious play. So, is this a time where, like in the 70s, you should have some exposure to, commodities or something outside of dollar based? Well, in my opinion, yeah, but it's always been a good idea just as a hedge, but not in a zero inflationary market, which is where we were for the longest time. Bitcoin here taking though a little bit of a breather from this meteoric pace, and it's going to be an interesting one when it comes to some of the crypto, particularly in Bitcoin, where it's a fixed amount, and you have all these ETFs scrambling to get into the situation. You sort of have a supply situation, which has driven the price up. Will that back off or ease as there's some outflows in that? Potentially, yes. You can see there's a growing positive extreme divergence here all the way back to the 52 range. Is that going to get filled at a certain point? Sure, just like they all have for the most part going back through. That's going to be an ebb and flow, but at the end of the day, you don't have that negative side component power yet built in because everyone's still trying to build their position on a limited supply. And so that's going to create some outside moves. And this is the whole idea behind gold and that, and scarcity and that, but it still has some amount of additional supply that's available. From an ETH standpoint, hitting at 76%, it's outpaced Bitcoin up this means that it's just going to move back a little bit faster to fill back in. Still, it's going to represent that outside move from regular currencies. And it's an opportunity for people to, in an easy way, from an ETF standpoint, which is where we always talked about it from a future standpoint. Being able to be in cryptos and then from a future standpoint provides the opportunity as a hedge. And it's no different than you would rotate into any other basket of, flipping from cyclicals to commodities. It's just a matter of assessing where the current economic situation is and evaluating. Now, are we in some unique times with the deficit and things like that? Oh, absolutely. The amount of government spending to maintain the growth level that we're at, sure. Uh, but that's always been the case. I mean, even going back from the 80s, I remember what a crisis it was because of the deficit levels, and the debt was like $200 billion, and you kind of laugh at that when you're spending that almost every couple of days in deficits. So it's all relative. And this is where you get relative increase in price. And, this is gets back to the same question. If you're buying your eggs and bacon and everything else in a normal basket of food, and how much it costs versus what it cost a decade, 2 decades, 3 decades ago, that's your consistency from a measurement standpoint. We can see from a 50K standpoint, we had the move, started to catch some weakness. DOC spread was pretty strong then white MBI took over, and that led to a move right around the 50% range. Didn't quite get enough sustained move of the MBI white leading over it to be able to keep that alive. And so it finally did make it, though, to the 0% move, but on a rising 0%. And so when that hit, you had filled positive extremes from right over here nicely, little carry through, and then bounce right back up to it. Still in a potential weak spot here. If you get a fade off of this MBI magenta, that's going to create secondary weakness right around 50% too. So again, volatility is still good, and definitely intraday ranges are reasonable. Post market right now, pretty neutral, just back and forth. And what we saw from, well, let's get it to where we can see this is the blue line here is just your end of day. But you can see how dramatic that move can be when you're going from the extreme sell and then pumped all the way back up to moderately give you a soft day. But this is just an opportunity to clear stops in that, and especially when you get this kind of front running, that you always have to have an element that's going to trade against it. And when we talk about options being such a prevalent force right now, I think you're going to see more of this kind of thing because it's just about reversing gamma and that, and it really just affects the decay rate and stuff for options, and so that's going to become more of a play that this is where dealers are adapting to the change from constant stock trading to more option trading, and this gives them the opportunity to wipe out some of that value through volatility, and that's an effective play, and it works just beautifully. So we're just going to continue to follow everything as it is and keep following what those readings are, looking for an edge as to where the economy is going, but definitely going to be a rougher road ahead as we approach summertime, particularly given where commodities and that are moving, and particularly if oil continues. And that assumes there's no geopolitical considerations, because you're obviously going to have national political situation. So we've got a dynamic set of months ahead. So look forward to it. As always, trade well. We'll talk again later. Have a good one.